Hello everyone, welcome to Bald Guy Money. I am obviously Bald Guy, and we're going to discuss a very interesting topic today because if you ask most people, they will say that the single biggest asset that they own is their home. Now, I know many of you are probably quoting Robert Kiyosaki right now and saying, but Bald Guy, your home, the place you live, is not an asset because it costs you money. And although I am inclined to agree with that, there are many people reaching retirement age that are looking forward to unlocking the benefits of downsizing their home, benefits which include unlocking equity that they have invested in the home they live in, because the price of the smaller home will presumably be less than the larger home they're selling. And it's also a way to keep costs down because anyone who owns a large home will tell you that they are expensive to maintain, especially when it comes to rising property taxes and insurance rates. So in this video, we are going to make the assumption that your home is your largest asset, and we're going to compare its performance versus the performance of gold with the goal of answering the following questions, starting with how much has gold and real estate appreciated in each year since 1987 versus today's prices. And we will be using median home sales price data from the US Federal Reserve as well as the average price of gold each year since 1987 to determine that. Once we've analyzed that data, I will show you in exactly which years a purchase of a house resulted in a higher return on investment versus gold, and vice versa. And I will finish by revealing which of these two assets has yielded the best annualized return since 1987 in order to answer the question, what appreciates more in value, your home or gold? Now, just before we get into it, if you're in the United States and want to purchase gold or silver from a great dealer with great prices, please check out channel partner Pimbex. They've got gold Krugerrands, a favorite of mine. In fact, I have one right here on my desk next to me, on their website right now for as low as 1.8% above spot, which is the lowest I have seen since 2019. So check out Pimbex.com for this deal. I will leave the link to it in the video description below. And for those of you looking to start a gold and silver IRA or want to convert an existing IRA to gold and silver without the high fees and predatory price spreads, call them at the number on the screen. Just please remember to let them know you came from Bald Guy Money. So, to begin, I want to establish a couple things for everyone watching. The calculations I will present in a moment take only the US dollar value of each of these assets in relation to each other into account. For gold, it does not include storage fees, capital gains taxes on gold if you sell it, or premiums on purchases. For housing, it does not include property taxes, closing fees or agent fees when you purchase a property. It doesn't include homeowners insurance, maintenance, or rental income if you happen to rent out a room in your home, for example. Finally, I will show you all a list just like this one, showing the price of each asset in a given year. For example, in 1987, an ounce of gold on average cost $447 for a troy ounce. And the median home price, which represents the average home price, was $104,700. I will then show you the return on investment for each asset per year versus the current value of that asset. This does not assume a dollar cost average approach for gold, as the assumption is you have a lump sum of money and are choosing between buying gold and a home that will eventually increase in value. So, I hope that is clear for everyone watching. Now let's take a look at the data. So here we have return on investment for gold and the average US home since 1987. What I want to bring to your attention first is the fact that if you had used your money to buy gold at the start of the period, so in 1987, your total return on investment versus the price today would be 355%. If you had used that money to buy a house, the value of the house will have appreciated by 299%, meaning that purchasing gold in that year was the better option. So I just wanted to explain the methodology a little bit more. And that's why it says right here in this column that gold was the winner for that year. Now, right here, I have counted the number of years housing outperformed gold, and I've counted the number of years gold outperformed housing. And as you can see, in the 37 years used in this analysis, of course, we're not using 2024, by the way, because we're only at the start of the year, gold has outperformed housing in 32 of the 37 years since 1987, with housing having its strongest period of performance versus gold in the years following the global financial crisis from 2010 to 2013, when real estate prices were in a slump due to the subprime mortgage crisis that caused the global downturn. Now, to add an extra layer to the data, and we're going to keep doing this throughout the video, if we average out the return, you can see that gold has returned 279% versus a 121% return on the average house. Meaning, if we divide that by 37 years to annualize the return, gold has returned 7.5% per year versus an annual return of 3.3% per year from housing, which means the answer to the question, which one of these assets has consistently yielded the best return, is gold. But we're not done there, because some of you may be saying, but what if you bought at the highest price of gold each year? Surely housing beat that. Or you may be asking, what would the return be if you bought the lowest price of gold each year? Well, if you're asking that question, you're in luck, because I've done the calculations and here they are, and they show that even if you bought the highest price of gold every year since 1987, you still would have beaten real estate 29 out of the 37 years in the period we're analyzing. And when buying the low price of gold each year, you will have beaten housing in 35 out of the 37 years, with housing only beating the low price of gold if you had bought in 2011 or 2012, which was a phenomenal time to purchase real estate and was the time I actually purchased my first piece of real estate. Now, this video is not meant to discourage anybody from buying a home or purchasing real estate. Remember, the majority of my personal net worth is in real estate today. This video is simply intended to show you all how important I think owning gold is, because many people incorrectly claim that gold does nothing. But if we take another look at this data, even if we assume an average rate of inflation around 4% annualized since 1987, in the least, gold has protected people's money from being eroded away by the silent inflation tax. And I think that's a great segue for us to move into today's viewer question, because it's kind of on this topic. And remember, I answer one viewer question in every video I do. You can leave your questions in the comments section below of this video. You never know, I just may pick your question to appear in my next video. And this week's question comes from somebody who calls themselves Kaku. And they asked, in the comments section of my last video, Kaku asked, I've often wondered what happens to retirement plans during a financial collapse. And that's a great question, because not enough people prepare themselves for what could happen in a financial collapse triggered by hyperinflation, as discussed in the last video. To answer this question, I want to cover something I've covered a couple times already here on the channel, and this is a refresher for some of you, but it might be new to some of you new viewers out there, and that is what a financial collapse really looks like. Because even in my last video, I got many comments from people who sincerely believe the world turns into an episode of The Walking Dead, the popular television series, when the US dollar dies. And I want to say that is simply not true, because it has happened, currencies dying, that's happened numerous times around the world, even in the last 40 years. And the one thing that we have learned from watching it play out each time is this: senior citizens, retirees living on a fixed income are always the hardest hit. And the reason is because many retirees, many senior citizens keep too much savings in cash, too much money in their primary residence, which is illiquid, meaning they don't have that money available to them, and many are relying on government pensions like US Social Security to take care of them. And in the case of Turkey, and this data is from last year, but it is still applicable today. In 2002, before the hyperinflation started there in Turkey, a retiree's pension was 1.3 times higher than the minimum wage. Fast forward to when I collected this data last year, the minimum wage is 1.7 times higher than the lowest pension. And what this means is many senior citizens are forced back into the workforce, forced back to go to work, and no matter what country you're living in today, it can be the US, Germany, UK, Australia, I'm certain that you've probably seen this. If you're in the United States, just take a look at the greeter in your local Walmart. I'm certain that some of these people were forced back into the labor force because inflation has eaten into their retirement. And the reason is this: because the sum of retirement accounts, cash savings, and government pensions never keep up with inflation, even when inflation levels are low, but especially in a financial collapse when inflation levels reach hyperinflationary levels. And that is why I keep a significant percentage of my net worth in gold and silver, so as to not fall victim to something we've all seen play out around the world dozens of times. Now, if you want to access the data that I've shown in this video, if you want more Bald Guy videos on the topics of stocks, real estate, mining, gold, silver, crypto, you name it, join my Patreon today. It's only $9.99 a month. You can cancel at any time, and you get a discount if you join for the whole year up front. And from my point of view, and I've heard other patrons say this, you really get a lot for your money. You get more than what the cost of joining the Patreon actually is. So if you want to support my channel and what I'm doing here, please consider joining today. And with that said, that's it for this video. I'm wishing you all a fantastic day ahead. And as I always say at the end of my videos, take care of yourselves and take care of each other. Goodbye.